Hey everybody, welcome to the Thursday night financial thing live stream. Welcome back. We have a very special stream for you this evening. Something a little bit different, something I've never really delved too much into. We have Andrew Adcock here, who is part of the Crowd for Angels team. And we're going to have a chat with him about what's going on with Crowd for Angels, and we're going to talk about general peer-to-peer lending things and some cryptocurrency, maybe a little bit of FCA regulation stuff that one of our watchers, Mike Powell, sent to me today, a letter that went out to all crowdfunding CEOs, which is very interesting. But yeah, thanks to everybody who is joining. We got a lot to get through this evening. We are here every Thursday evening at 7:30 p.m. UK time and 2:30 p.m. US Eastern Time. I'm currently in Orlando, plan to be back in the UK in next month. All being well with Mr. Coronavirus. But if you have questions or comments, please go ahead and put them in the chat box. If you use anything you've ever wondered about crowdfunding, or you have questions for Andrew or for myself, we'll do a Q&A at the end. Yeah, we usually come up with some interesting questions. Let's go ahead and say a quick hi to everybody. Colin is in the Peak District, Stephen in Nottingham, Dan Barber in Derbyshire. We got Tony Walton. I have no idea where you are. He's in H, whatever that means. Annabelle Nyron in Spain. Mike Powell in Southampton. Steve Manton is here. And Alan Stratford. Tony is in Somerset. Robert Pates in Greece. And David Allard in the Overcast Midlands. Paul Bagworth in Kenilworth. Mark Mason is here. Peter Vince from Leatherhead. And Alan Lomas Chesterfield. So we are going to get right into it. Let me bring on the man himself. There he is, Andrew Adcock, rocking the lumberjack beard that I've never been able to quite get that. But it's very nice. It's a good beard, Andrew. Welcome. Thank you again
Thank you for having me.
Yeah, for joining us. It's a good time to be in alternative finance at the moment, wouldn't you say?
Absolutely. I mean, well, I've been in it for a number of years, so I'm always excited about everything alternative, or basically burning down the banks. Let's put it that way.
I like that. I like that we're on the same page about the banking system, because I'm not a big fan of the evil banking system. But listen, let's get right into it. We're going to talk a little bit about. You had mentioned to me that you're a peer-to-peer lending investor yourself. What's your background within as far as you investing your own money? How long have you been doing that? And which platforms have you plonked your own cash into?
Yeah, absolutely. I mean, as I've mentioned to you in the past, Lawrence, I followed your blog for a number of years, and I've been in peer-to-peer as such since 2016, investing my own capital, and their platforms such as LendInvest, Lendy, I know that's now defunct, Kuflink, Assets Capital, Funding Circle. So quite a range. None really specific reasons, but just trying to get a spread across the different platforms and seek a good return on my savings really and my income.
Mm-hmm. And what have your results been generally across the board? Have you had platforms that you've really liked? It's unusual to have somebody speaking openly about this, because most people kind of dodge these questions. So whenever I hear that, I'm always gonna,
absolutely. I mean, I also invest on Crowd for Angels and other crowdfunding platforms, so I'm not going to dodge that either. Mm-hmm. I personally, right now, and I think for the last year and a half, 2 years, I've really been inclined to LendInvest. I think the loans that they're pushing forwards, the performance of the portfolio, and the information that they provide, the ability to talk to the team, is everything that endears me to them. 2016, 2017, I had I'd say a stonking year. You were getting 8 or 9% on your investments. 2018, it started to buckle. I think the reason for that is a number of the loans were coming to term and they simply weren't being paid back. And actually, if I think back to it, it's because how were they going to repay back these loans without a sensible exit strategy? So they either had to be rolled over or they were delayed. And then I think in 2019 was my first negative year, and that's really when, you know, things like loans on Funding Circle simply had gone into bad debt. Lendy had collapsed. Funding Secure shortly thereafter, and a few other platforms had also gone to the wall. So the 3 to 5 year bonds that I'd invested in, thinking that were giving me safe returns, weren't coming back. And so that was a down year for me. Since then, though, I mean, 2020, 21, I've really changed my target. I'm not trying to seek what I would class as huge capital gains, 8 to 12%. That's just greedy. Instead, I'm looking for, the 4s, 5s, and 6s that I can get from these peer-to-peer platforms. And Lend Invest at the moment, a prime example, I think I earn about 5.7 on my performing portfolio. Of course, there's a little bit of bad debt in there, and I like how they're handling it. They don't go straight for the throat. They allow time, they allow restructuring. And you can tell it's run by professionals that know what they're doing, or at least they know the industry in which they are providing finance. So yes, the last couple of years in peer-to-peer have been okay. I mean, it's certainly better than inflation. It's significantly better than any savings that I could invest into. Yeah. And I've also been taking advantage of the IFISA where it's available, and to make sure that returns tax-free.
So you had mentioned putting your money into Lendy was one of the companies I think you said. We have one of the Lendy Action Group members in the chat, Mike Powell, who they had I don't know if you saw this, but they had a court victory, a big court victory last week where they managed to fight the waterfall.
Really?
Yeah,
No, I hadn't seen that. I have visited the Lendy Action Group. I believe I have also signed up for it. So apologies that I haven't followed as closely as I should.
Yeah, they've had a big victory, so that was very, very impressive. What are your thoughts upon, these failed peer-to-peer lending companies and how it just negatively tarnishes the industry? Having been on both sides, you're somebody that's involved in the crowdfunding side, but you've also put your own money in. Mistakenly, like the rest of us, we had a little bit too much trust there in some ways. What do you think about that, though, and how it's affected the industry as a whole?
Yeah, I mean, I should start off by saying any failure is always unwelcomed. It doesn't matter if you're a crowdfunding platform or a peer-to-peer platform. Ultimately, a failed platform is not good for the employees. It's not good for the investors. It's not good for the companies that are utilizing those platforms for funding. I think specifically with Lendy, I was more to blame. At that point when I started investing through Lendy, greed had taken over. You're looking for that return of 10, 11, 12%. And some people had mentioned Lendy to me. They seemed very reputable. They were sponsoring sailing weeks, things of that nature. They looked like a big company. And in investing with them, I failed to do as much due diligence as I normally would. There's prime examples where I've simply looked at the GDV. I figured, oh, that's a low enough figure. I'll put some cash into this, rather than really reading the project, looking at the area, and looking at the exit strategy. Again, if we come to that, the fact is that any project development, they're looking at 12 to 18 months, but realistically, they could take anywhere up to 3 to 4 years, depending on planning permission, complexities. And I think I just made some bad decisions there. I think I made quick decisions. That was my problem. For diversity, to have small amounts of capital in each of these, I've simply taken a basket approach. And maybe that was the wrong direction. But in terms of Lendy themselves, I feel that they could have done more, absolutely. And I think the administrators, I know about the waterfall clause. I think that's pretty horrendous. I think that's it's a vile way to treat investors. We're meant to treat everybody fairly, both parties, the investors and the companies, and they seem to be slightly underhand with that tactic. So I wasn't a fan of it. When I read about it, I did, actually stress my concerns to the administrators, and I also stressed my concerns about the length it's taking, the cost involved. I mean, I appreciate that peer-to-peer as an industry is quite new. Administrators really don't have a handle on how to wind these matters up. They're having to deal with technical platforms and paper assets. There's a lot of moving parts, but still, when the bills are running into the millions, we have to ask questions, not only as investors, me included, but as platforms. What can we do better? And I think in some ways, the FCA's response to that has been fair and proportionate. They've essentially asked P2P platforms to come under a form of regulatory sort of standards. They've asked for them to undertake certain checks. They've asked for platforms, to have contingency plans in place. So I think that's good. But going forwards, what I've learned is to look at the company in a little bit more depth. I have consolidated platforms. For instance, Funding Circle, I've moved away from completely. And now I'm looking to the future and thinking, where do I want to put my money, and how can I devise it in a way that, even if one goes down, it doesn't bring the whole portfolio into a negative state, which Lendy did. At the time, I think it was worth about 7% of my peer-to-peer portfolio. And then you can imagine if that's taken offline, immediately anything you've made at 5, 6, and 7% has been wiped out. So that was it was a difficult pill to swallow, but I've learned from it for sure. Sorry, Lawrence, I actually can't hear you.
Sorry, I had muted so I could have a drink. Let's talk about the industry going forward now in 2022. It feels to me like it's a contracting industry at the moment. There isn't really any new players in the business. The FCA is really coming down on giving regulatory licenses to new companies. They've even, I've talked to a couple of new companies that have tried to get licenses, and they've said it's been extremely difficult. Do you foresee it's going to be a business or a sector that continues to contract, or that it'll eventually break out and start to grow again with new companies coming into the space?
That's a good question. The industry has contracted. I think even inside of it, we have seen a crackdown from the FCA. We have seen platforms, unfortunately, close down accordingly. However, I'm actually very positive, and there's a few reasons why. First of all, we've seen more institutional players come to the market, but not only as investors in this case, but also as platforms to allow investors themselves, individuals, to invest through them. A prime example is Triodos Bank. I mean, I know they do crowdfunding, not lending, but there's a bank that would have no business in this sort of alternative finance market, yet they've spun out the side of it a platform that allows their customers to invest in projects that they're interested in. And I think we're going to see more of that. We're going to see, I think these challenger banks offering that type of service whereby users can invest through them to have a better gain. Because quite frankly, right now, if you put your money in a savings account, it's being eroded by inflation, and it's just not making much sense. Now, in terms of new players in the market, yes, we have people approach us. I think back in 2017, 16, 17, 18, you saw a proliferation of appointed representatives. So those platforms, for anybody who doesn't know, that essentially utilize another platform's authorization to operate. Mm-hmm. The FCA didn't really do much at that point in time, but I think they've realized that was negative to the industry. First of all, how do you control an appointed representative? And secondly, are they are they sure that they're undertaking their checks and balances, etc. So yes, there has been a delay in this, what I call turnover, from people deciding, okay, we can't go down this appointed representative route, but now we're going to go and get directly regulated ourselves. And I think if you look at different member associations, we're part of the UK Crowdfunding Association, but there's I think there's Level 37 and there's a few others. Membership has been increasing as people seek some form of regulatory status from the FCA. There's just a bit of confusion that the FCA need to clear up, and they do need to clear their backlog. You're absolutely right. Things that should only take 3 or 6 months are taking 12 to 18 months. I know we're going to get onto crypto a little bit later, but if you look at the crypto sandbox, they keep just adding cohorts rather than approving platforms to proceed. And whilst that's okay, they're kicking the stone down the road a little bit, what they end up doing is delaying people further. People keep burning cash, and then you end up in a situation where either you get approved and you're going to lose a lot of money but hopefully make some money one day, or you're simply not going to have enough money to carry on running. And it's that second option that's unfortunately at the moment I think is impacting a lot of businesses. They're not having the backing that they need to get through the FCA.
Yeah, that's definitely a big problem. Cash burn, the expenses of becoming regulated is a big issue in the alternative finance. So let me talk about crowdfunding now. I'm going to be the first to admit I am not experienced in crowdfunding at all. I've never invested in these company startup shares, Seeders, Crowdcube. But I wanted to have you come on. Maybe you can convert me into being somebody that thinks this is a good idea. I've seen some of the returns from some of these shares that have been quite dramatic. It seems to be secondary market based, where people are flipping. They're buying into these companies and then flipping them for a profit. Why did you get into the crowdfunding business space? Like, what was your background briefly before you entered into the Crowd for Angels situation?
Yeah. So my background's a bit of a colourful one. I actually, in university, I founded my first company with another student, a German chap, and that business was frank reviews for universities, because I think the whole idea of university, what I was sold in the very colourful brochure, wasn't what I received. Actually, the complete opposite. And so we wanted to create a business and get it out there. I mean, when you create a business for the first time, it's extremely difficult. I knew a bit of coding. I didn't know too much. I certainly didn't know anything about finance and how we were going to pay for ourselves. I mean, I was fortunate when I was at university. I had also a full-time job, so I sort of could support myself, go to university and build this little startup. But coming towards the end of university, I needed to do something. And fortunately, the actual director of Crowd for Angels and founder, Tony de Nazareth, he was my first investor. He invested £50,000 into the company to allow me time, effectively, to build the platform that I want, get it out there to students, alumni, etc., and have that grow. And I had some, wild times at the same point and grew something quite organic. From that, I was approached by Tony a number of years later to assist him with a social media business that he had. So I joined him. At the time I had a mortgage to pay. I thought, yep, it's the right time to move on, get an actual paying job and pay that mortgage, which was absolutely fine. And learning about his background was fascinating. He's 72 at the moment, but his background is in corporate finance. He's worked across the world in different banks, running banks. And about 15 to 20 years ago, he started investing in startup companies or young companies and providing them with VC finance. When he invested into 9010 as the company was. He was coming at the end of the cycle. The company was looking to list, but it failed, and it needed someone to steer the ship, so he took it over. His crazy idea, this was back in 2011, 2012, was to combine a social media network with investing. And that's where the crowdfunding idea came from. And I was brought along to effectively build the interface, the pathway that investors see. And ever since then, we've just been working together in partnerships. I'm very fortunate. I'm surrounded by extremely intelligent people. You know, the two directors, they're both chartered accountants. There's another person going through ACA at the moment. We've got a doctorate on board. We've got, you know, our compliance, etc. So I'm learning, but my background is really hands-on and raising my own round and then investing my own money. I've been investing my own funds since I was 18. Dragon Oil was the first company, if anybody's really interested. And we launched Crowd for Angels in 2012. In 2014, it went live after regulatory approval. And ever since then, I've just been hands-on trying to build the company, but also doing things that are innovative and slightly different. I come from a time when, at 10, 11 years old, I had a PC. And that wasn't a rare thing. So we had connections to the internet. Mm-hmm. We were, talking with people in different countries. And the idea that sort of, I guess, the traditional business model, traditional finance model was quite localized, doesn't work very well. And that's just, I guess, pushed me into a projection that things are global and we need to work in a global manner. And Crowd for Angels has really, I guess, benefited in some ways. But yeah, that's a little potted history about me and Crowd for Angels.
How old are you, Andrew, by the way? You look like a baby.
I'm 33. I am a child.
Oh, you're still a baby. Okay, I was just wondering. Curious.
Yeah, I've got a few scars, though. I have been working full-time since 17, so I've not worked part-time for a long
Which
while.
university did you attend?
I went to the University of Westminster. Okay. I won't recommend it.
Well, we won't get into that, but I have my own personal views about universities and the money churning machines that those have become in these days.
Yes.
Let's not go there. So for anybody that maybe doesn't understand, most of the people who are watching the stream are pretty, I would say, immediate advanced investors. But what crowdfunding basically is you have the opportunity to buy shares that are not your typical type of shares that are offered on stock market public companies, but shares that you can buy in startup companies and then use crowdfunding platforms if you need to liquidate them. And then you can own pieces of these companies, and hopefully in the future there is some kind of an exit strategy to get out of that. So that's a quick little synopsis of what you actually do. Tell me what the differences between your company, say, Seeders is very well known. A lot of people are always emailing me asking me about Seeders, companies that they can invest through. What's the difference? What do you offer that's different from a company like Seeders, or are you just a baseline competitor?
Just the same. I mean, crowdfunding as a per se, like you mentioned, you get a chance to invest in a young company before it hopefully goes global and you make gains on your capital. I mean, I was fortunate that I caught what is now Monzo when it was Mondo and it was on Crowdcube. So there are cases where you can certainly make money. And actually, right now, I think the secondary markets provide the most exciting period for me, because traditional exits, as you know, you go for an IPO, you'd have a trade sale or you'd have a buyback, but they wouldn't come for 5, 7, or 10 years. The secondary market allows that liquidation and you to solidify your gain, really. But going to Crowd for Angels, what really makes us different, I think, was always our innovation and our human touch. First of all, in terms of innovation, we were one of the first crowdfunding platforms to have a convertible bond into a listed company. So we've had companies like Advanced Oncotherapy, thinking of others, even Vertitech lately, whereby, you'll buy the bonds and at a future date, you can convert those bonds into shares at a discount to the market price. And that hadn't been done elsewhere in 2016. The other things, if we look at the crypto and blockchain, we introduced a payment gateway for people with cryptocurrencies so they could invest using their Bitcoin, Ethereum, Litecoin, DAI, for instance. And we've always tried to support projects that are slightly different, that might be turned away from a normal crowdfunding platform, as I call it. So at the moment, we're just about to launch a raise for a cannabis company that is incorporated in Portugal. They're about to do a clinical trial here in London, and they're looking to raise capital for that. So we try and be innovative within the space. But where I also think is really important, I feel the industry is leaning towards, is that human approach. If anybody's ever gone to Crowd for Angels, maybe some of your listeners have, you'll find a telephone number, you'll find live chat, you'll find my email. There's always a human at the other side of the screen, because whilst, yes, we're conducting our business via the internet, and that might feel a bit humanless, there is somebody there to answer your question. I'm always happy when people call me and they talk to me. It might not be even about Crowd for Angels. Very recently, I think yesterday, I was talking about P2P portfolios with a gentleman via live chat. There's nothing I could help him with, but having that ability to have a conversation, answer their questions, and just, I guess, perform in excess of their expectations is what I want to deliver. Having been on P2P platforms and crowdfunding platforms, when you reach out to somebody, you either get the message that they'll come back to you in 30 minutes, or it's an email 2 days later, which is after the fact, and you've probably already resolved your problem. So we try and take that away, and we try and be the human platform. But as I said, it's innovation's really at the heart of it. It sounds odd, Lawrence, but actually in 2014, when we launched, we introduced the share price to crowdfunding platforms, because up until that point, when you invested, you put £10 and £100 in, and the platform, after the fundraise was closed, would work out the lowest denomination and then do all the subdivisions and things of that nature. I thought that was crazy, So we actually introduced the share price to crowdfunding platforms, and now people have stolen that, I might add. We introduced it, they've stolen it.
They always do. People will always steal good innovation techniques. Let me ask you about what kind of returns can investors expect? Well, I wouldn't say expect, because I think it's very speculative, what the product that you offer. So are there situations where one of these shares can, well, I'm sure they have gone to zero, right? There's companies that have gone out of business. One of our people who is watching mentioned buy-to-let cars maybe is one of the
unfortunately that's it was the car sales company. They provided a bond on the platform and they entered administration. We're still going through collecting the security, so we have been able to distribute some funds to investors, and there's still some cars to be sold when we get hold of them. It's a challenge. I think the reality is, if you invest in a bond on Crowd for Angels, realistically, you shouldn't be expecting more than 8%. The latest one we did, which was the Vertitech, a listed company, was at 7%. The one previous to that was a blockchain company at 8%. I think 4 to 8% is a reasonable amount based on the risk portfolio and finding a good company. In terms of equity, you're absolutely right. It's hugely speculative, so you have to break it down slightly. First of all, most equity companies will offer some form of tax relief, whether it's SEIS or EIS. And that just means that, if I invested £5,000, I can get up to 50% of my what I've invested back in tax relief. And I think that's fantastic. That's a great thing from the government. I hope they raise the SEIS limit from 150 to 250,000 if they're listening. But then you also then have to look at future rounds, and the valuations provided there. Right now, the portfolio of companies that we've had through our platform if you took the forward rounds and you took the exits via the secondary market, I believe the average on a 5-year investment is 2.7 multiples of the money you've invested. So it can be very good, but the exits are few and far between. If you look at any of the big platforms, they might have 100 companies and really exited are only 3 or 5. And this is why I said the secondary market for me is something of real interest. It allows an investor a potential opportunity to exit a position. Of course, again, it comes down to liquidity and someone buying your stake. But we're also seeing institutional investors take individual investor stakes, and that's an exit position. But the tax relief, if you take that into account, it can be very profitable. I've been somewhat fortunate. I've backed good companies both on Crowdcube and Seeders. Some of them, I've lost. I've lost one on Crowd for Angels, but there are other ones that I've done very well on. And I continue to support young companies. I think, as a first line of funding, that's what Crowd for Angels and crowdfunding in general is good for.
Yeah. So and diversification obviously is an important thing here. If you are investing in this type of thing, you just don't want to put all of your cash into one single company. That would be very risky.
Oh, absolutely. And you shouldn't look at one platform either. It's the same as peer-to-peer. Invest in 5 different peer-to-peer platforms and try and get a basket of investments.
Yeah.
And it makes more sense.
So one thing I was thinking about with your company, let's say I were to buy 100 shares into, Squiggly & Co. and Crowd for Angels were to fail as a business. Where would that leave me as far as these shares?
So that is an interesting question. I actually had that today from a live chat person.
Yeah.
So there's a few options here. The first option will be we utilize a nominee company. So actually, the nominee Thomas Grant and Company Nominees Limited hold shares on behalf of investors. If Crowd for Angels would fail, that relationship wouldn't change. If Thomas Grant was to fail, the option then is to have your shares listed directly with the company. So you would be a named participant at Companies House for the company. Now, we have had in the Crowd for Angels history one nominee fail. And what we were able to do was find a new nominee, Thomas Grant, of course, and just transfer the certificates accordingly. So for the underlying investor, the beneficiary owner, they had no real difference. They went from one nominee to the other nominee, and that was it.
Yes. So I'm always thinking, Andrew, about risk, having been an investor in several of these failed peer-to-peer companies, loans. So I'm thinking here with the risk is obviously you buy these shares, the company that you buy the shares in fails, your share price would obviously be worth nothing. That would be one of the risks. Second risk, Crowd for Angels were to fail. Your shares then, you still own them, but the liquidity then becomes a bit of an issue because now if you want to exit, there is no platform for those shares to be put up on and sold. What are the other risks that somebody would be looking at? Because I think it's important to look at both sides of the coin. What are the other risks?
Risk is always a part of investment. I think anybody in this field should be aware of them. You had the company fail there, in which case I think that is probably the worst case scenario. The company collapses. We're talking about the investee company. From an investor's point of view, you've had your tax relief. The next thing you could do is have your capital gains relief. And that's going to soften the impact. But ultimately, it's not like a loan. There isn't a security. The company is not going to dispose of assets and you're going to be repaid your investment. So that's the largest risk. In terms of either Crowd for Angels or the nominee failing, of course, as you mentioned, that can impact liquidity, but it's not necessarily going to stop liquidity. Anybody who owns shares in a company is freely allowed to trade them to somebody else. So if you and I, Lawrence, were both investors in that company, we'd known that it's, I wanted to buy your shares. we could agree a private transaction, approach the company, and they would make the update to the share register. Of course, if we get a little bit further down the line with these companies, there are third parties that offer secondary markets as well. So, there's one company that springs to mind, JP Jenkins. They're slightly larger, but again, that could be a solution to the part there. I think in terms of other risks you have to be aware of in certainly in anything digital is scams. There are issues whereby companies, not on generally crowdfunding platforms, but certainly unregulated entities where you'll invest some money but it doesn't actually go to the business, or there's a phishing attempt. Data is really important. I think people underestimate the value of data and social engineering.
Yeah.
And so if I get your details and I start sending you emails and you start filling out forms, quite quickly, we could establish credit card details, home addresses, things of that nature, even passport data. So that's one risk. And that risk actually is whilst both parties remain alive, because the crowdfunding platform is alive and the investee company is alive, and your data is intercepted. The traditional hack, if you will. So that's one risk you have to look at. Risk of regulation and anti-money laundering rules are also something that you have to be aware of. Of course, as a platform, we have a duty of care towards our investors. And if the FCA felt that we weren't performing in our duties, they, of course, could come along and ask us to, for instance, stop allowing withdrawals. Mm-hmm. And so if you're a peer-to-peer investor and you rely on your income, your monthly interest payments as a form of income to supplement your pension, that really can impact you. Mm-hmm. And I think that's one of those risks that, whilst obtruse, it does happen in the real world. I think Lendy was, they had that happen. So that's another risk that you can be impacted by. And then there's other risks, such as funds being sent to incorrect accounts and things of that nature. I mean, that's really the responsibility of platforms to ensure that the person that they are dealing with is the investor. Mm-hmm. So if you invest on my platform, you want to withdraw those funds, it goes to you accordingly. There's also, I don't want to go into too many risks. It makes my platform sound terrible, but there are also really, things that you have to look out for, such as the cost of the transaction. And this is I think a point that people are discussing right now, is the fees that platforms charge, but also their intermediaries charge. For instance, if you transfer funds from a foreign bank account to a UK bank account, you'll be obviously hit by the interbank exchange rate, and you'll also be hit by the bank transacting fee. Mm-hmm. And so whilst that doesn't sound like much, when you take it into your portfolio set and you're thinking, I'm aiming for maybe a 5% return, these can diminish that return. And it's something just to be wary of, and something that I think sometimes people don't ask often enough. What is the cost for me to, for instance, transfer an IFISA? Is there a cost? What's the time delay? Can I sell my bonds, etc.? So these are the things that people or investors should really also consider when investing in a platform or choosing a platform.
Mm-hmm. Yeah, those are all important risks. And if everybody watching out there can hit the thumbs up right now, it helps with the YouTube search algorithm, so I appreciate that. We've been going for about 45 minutes. I definitely always try to keep this under an hour. I fail miserably, it seems, every week. So we won't keep you too long. What I wanted to ask you is Crowd for Angels a profitable business at the moment? And if not, when do you expect to be? Because I noticed in that FCA letter that went out to you CEOs today that Mike have forwarded, it did mention about that a lot of crowdfunding platforms are possibly operating in the red right now. And that also, that affects the rest of the platform actually not being able to continue because of funding, cash burn and whatnot. So how do you stand as far as that part of the business goes with profitability?
Yeah, I mean, all accounts for crowdfunding platforms are audited, so people can actually go and see them publicly. We are loss making. Last year, I think we made a loss of around about 130,000. I feel that was the answer.
Mm-hmm.
We were very close to breaking even when COVID hit. If you looked at the projections, the number of deals we were doing, the amounts we were doing, it was in the right direction. Um, at the start of the pandemic, though, it slacked off completely. There was a lot of cheap capital around, and also, in like all situations, people like to sit on their money. They don't want to invest, me included. Um, we're starting to get back to that level of traction now where we left off. So realistically speaking, we are at least 12 months away from profitability. Um, I'd say 12 to 18 months, 18 months really being the ballpark figure.
Mm-hmm.
We have updated our fee structure, as many platforms have. And what we've done to really combat, the effects of COVID is slim down the costs.
Mm-hmm.
And just try and make sure that we're tight on expenses.
Okay, that makes sense. Have you how are those losses funded through your company? Who pays for the red? Who pays for that every month?
No, it's an honest question, right? So many, I guess, most of the funding has came from Tony himself. Mm-hmm. So the two directors did fund the company and have put a significant amount of capital in themselves. We do have backing of an institutional investor, and they have continued to support us and have indicated that they will continue to support us. We've also conducted 3 very small crowdfunding rounds in the early years, so in 2015, 16, maybe even 17. From the crowd. So that's where the funding came from. We were fairly fortunate. Just prior to COVID, we were cash rich, as I would call it. And so we had enough capital to sustain for a further 2.5 to 3 years at that burn rate. So at our new burn rate, we'd be able to go longer. And that was a smart move, just because it allowed us to survive through COVID and rebuild back stronger. I know a few of my partner platforms, not crowdfunding, but in the bond space for IFISs, have gone to administration. And we're working with administrators to acquire the portfolios. Mm-hmm. and hopefully help the investors out, because anybody who goes into administration, there's hundreds of people that are left in the dark, really.
Yeah. So when you funded Crowd for Angels, did you do that on Crowd for Angels?
Yes.
Are you allowed to do that? Is that okay?
You are. Not. So it's a funny one. Technically, yes, you are. And back when we did it, it was the normal thing. You would raise for your own platform on your own platform as a sign of creed. Really, it's your platform. If you can't fundraise for your own platform, how can you fundraise for somebody else? The FCA have indicated in the last year that they would prefer crowdfunding platforms to use their competitors' platforms. And the reason really comes down to regulatory rules, but also certifying the information. As you can imagine, if I put my own pitch onto my own platform, can you trust the information I put on there? And the FCA came to the conclusion that, well, probably not, because you've got all the data at hand. Now, of course, as a crowdfunding platform, we would disagree by that and say that we stand by the due diligence we do and the checks that we make. If it's good enough for the companies, it has to be good enough for us as well. We have to surpass our own checks. I would believe going forward we wouldn't use our own platform again, partly because we're in a stage that it's not something we would look for. We're really now into the institutional money rounds. Mm-hmm. But also, I think, bearing in mind what the FCA have said about utilizing a different platform for that certification, if you will, it's worthwhile looking at your competitors and saying, can something be done?
Yeah. I mean, you want to go wherever you can raise the most money, I would imagine, as a business, right? If you are funding your company, that was something I wanted to ask you too. How do you persuade people to come and use your platform versus going to Seedrs or one of the more well-known crowdfunding companies?
Yeah, certainly. The reality is that it comes down into a few categories. Some smaller companies won't be acceptable onto a Seedrs or a Crowdcube because either they're seeking too little of capital or they don't have the investment base behind them. And so, we are the better choice for them. In some cases, it's just a product fit. So, for instance, we will not fundraise for a brewery. It's not something we would do. It doesn't suit our angels. Mm-hmm. And so we would say, you're best to speak to Crowdcube in that instance. And then in some cases, it's also, we've met the company, we've had that human touch, we've been able to talk to them and convince them to come on. I've never had a conversation where I haven't mentioned a competitor, because I feel I need to be able to stand up against them. Even though I'm the smaller platform by far, absolutely. I feel that, if I'm going to win your business, you have to trust what I'm doing is right and fair, proper, and you feel supported. And we tend to get that. We get that from a lot of companies, that it's the aftercare service that they also like. We don't charge fees afterwards, which is quite different. It's you fundraise, we want to support you as a company because it supports the angels that invested, and hopefully when you exit, it looks good for Crowd for Angels. So it makes sense in a virtuous circle.
Okay. Let's talk a little bit about cryptocurrency. I presume you're a fan from probably, I could just tell. I don't know whether it's the glasses, but
is it the beard?
Yeah, no, it's the glasses. What do you? First of all, how long have you been dabbling in that for? When did you make your first cryptocurrency investment?
So I've been in it for a good time, since 2013. And how I got into it was I watched an episode of Click actually on BBC, and I started to try and mine Bitcoin. Horrendous, so I just bought some instead. Because
did you mine any of it? Were you able to mine anything?
Yes, yeah, I was. Back then, it would have been the equivalent of about 0.3 of a Bitcoin, so not very much. And I've got an odd fear in my head that if I leave the computer on, there'll be a fire. So I didn't like the concept of leaving my computer to mine.
Sure.
And I just couldn't be bothered anymore. So I ended up buying a little bit of it. And then from 2014, actually, Crowd for Angels started also dabbling in crypto. And we had our first ever blockchain-backed company on the platform. And it's just been not a steady hill, but we try and do a lot now in that space, and we know a lot of companies in the space, and you just end up meeting the community and supporting it accordingly.
Where did you buy your crypto back in 2013? Because obviously companies like Coinbase were not around. Hopefully it wasn't Mt. Gox.
No, actually it was on tour in the onion markets, but
is that true?
Yes, yeah. So you could do a PayPal transaction back then for like $5, and you'd get some Bitcoin. I mean, back then, if you went onto the onion markets, they were selling all types of random things, and if you wanted to buy something, generally you had to pay in Bitcoin.
Wait, what is the onion market? What is that? Are you talking about a market that sells onions?
Yeah, so we're there is a web browser called Tor. It's synonymous with hackers and people like this, or the dark web, if you will. And effectively, it's an encrypted web browser, so no one can see your traffic, and likewise, you shouldn't be able to see anybody else. And so the websites you visit are called onions, because there'll be an address .onion, like a layer of an onion. And so when we talk about markets on Tor, you're talking about onion markets. And so you would go, it's like an eBay, if you will. There'll be an eBay. You would buy whatever you wanted. So if you wanted some software, you could buy it for, say, $5. But to buy it, you had to use Bitcoin. And, back then it was PNG messaging, not PNG, PMP emails and things of that nature. So it's all a bit technical. But yeah, that was my first purchase. When Coinbase came around, I was very happy. I mean, that
It's a
made
lot easier.
things far simpler. And today, I use a mix of streams, whether I go to someone like Coinbase, who are based in the city, Coinbase or Binance. I know obviously Binance is having their troubles at the moment, so I sort of steered clear from that. But most of my Bitcoin, just so people are aware, is stored offline in a hardware wallet. I don't keep it in an exchange.
Yeah, actually, I've been writing this pretty long guide to cryptocurrency, and the more I write it, the bigger it gets. And now I started to look at offline cold storage and things like that. But it's funny, when you mentioned Onion Market, I literally envisioned that you were going to the East End of London and there was a guy with an onion cart that also, for some reason, was able to sell you some Bitcoin, but that's not what you were talking about. What do you see the future? I've been saying, on this stream for several months, or as long as I've been doing it. I was started investing in Bitcoin in 2017, so I consider myself a bit of a late adopter. And when I first got into it, Andrew, I had no clue what the hell it was for, why it was, why anybody would ever want to own it, how it could possibly be worth anything. But of course, further research, now I would say, enlightened individual when it comes to investing. But I did too look at it in 2013 when it was, I think it was $100 back then, and my friend said, "Hey, put in $1,000 with me, £1,000, and I think this is going to be big." And I politely declined, stupidly at that time, but live and learn. What do you see as the future of this Bitcoin revolution going forward?
That's a fascinating question. I think let's go back in time to a use case, a real life use case. We had a company, All Star Minerals, a listed company, come on to Crowdfunding Angels in 2016, 15, 16. And there was we're only allowed to advertise in the UK, which we did, but it has operations in Australia, and there were Australian investors. There was a gentleman, he wanted to invest £100 from Australia. By the time the funds had reached us, it was £85. Unfortunately, they weren't successful, and so we had to return the funds. So it got back to him, and it was £70. So his lost opportunity cost him £30 effectively. It had to be done a better way, and that's when we implemented the first ever payment gateway for Bitcoin. So people anywhere in the world could come to Crowdfunding Angels and invest using Bitcoin. And the benefit of doing that is that same gentleman came back a couple of months later for a pitch, £100 again, but this time it cost the equivalent of about £2.54, I think, to do that same transaction. I thought it was wonderful, and that's the real world case for it. Going forwards, I'm not going to go into all the altcoins and the transactions per seconds and things like this. What people see Bitcoin as, and what I see Bitcoin as, is actually, digital gold is a good word for it, because you see it as a secured base layer. It records transactions day after day in a straight line, and the value of it is very valuable. But it's actually where you operate is in what we call layer 2 and layer 3 solutions. So these are things called side chains. And the idea of a side chain is when you and me do a payment transaction, rather than writing our transaction into that base layer that will cost you and me £8, £10, etc., you create a new blockchain, you write it into that blockchain, and then you send one transaction down every, say, 12 hours or 8 hours or 24 hours or however you set it up. So all the transactions that happened on the second layer are when you send it down once, it's far cheaper. And this is, at the moment, they're testing the Lightning Network. So you'll hear that banding about the Lightning Network. And this is this second layer. And that's what it makes it cheaper, because you fill like 1,000 blocks and put it into one. So, £8 divided by 1,000, you can do the mathematics. I do see international fund transfers being conducted via the blockchain. And I do see even the low valued financials happening via the blockchain. It's just a case that they won't happen on the base layer. They'll happen on layer 2, layer 3, and the base layer will just pip along. I think people are a bit naive to think that institutions won't get in on the transactions and governments won't regulate. Of course they will. Anything of significant value that impacts daily life will have institutions come into the market and regulators regulate accordingly. Rightly or wrongly, everything on the blockchain is public. So all that data is public. And, you know, for tax receipts and things like this, the IRS, the HMRC, they can see everything. As a normal citizen, I'm not trying to hide my tax. That's absolutely fine. You know, I'm happy to declare. It's just a case of the community, this sort of mindset that burn the banks, which I started this conversation off with, and trying to find consensus between both of them and coming up with solutions that genuinely impact the end user positively, like the gentleman with £100. And I think we're getting there slowly, but if you were to put it in an analogy, we're still at the VHS stage. You know, there's a lot more technology to come, a lot more development, a lot more decision making, and just simple solutions. We're still not there.
It's a great point, and I get emailed this constantly. Every week I get the same email. Have I missed the boat when it comes to Bitcoin? And I keep telling people, you are in the very infancy of, imagine what the internet was like back in the prodigy, you know, AOL dial-up modem days when we were running on 56K. Maybe not that early, but maybe at the 256K modem point now with Bitcoin, and you know, you might not see these gains of, you know, thousands of percent now going forward, but we're still in the very early times of where this technology behind the cryptocurrency is just going to provide so many real-world use cases that are going to really change the way that, you know, transactions are processed. And being able to get in even now, I think, is a wonderful opportunity. And these altcoins are, sure, there's big risks. You know, I've been hearing so many different things about these other payment solutions like Solana and XRP, Ripple, and things like that. But I think it's still just the perfect time to be able to diversify your investment. There's so many. We have a Facebook group too, Andrew, and there's some people on there that are very skeptical of Bitcoin because they're some of us grew up in an old school investing mentality of, you know, we can only invest in something tangible that we can touch, and because this is digital and completely digital, a lot of people don't understand it. But I'm so far on the opposite side of skepticism now that it's quite the turnaround, because I did used to be one of those skeptical people, especially when you see that volatility of the price go from 20,000 down to 3,000 in the matter of a few days or weeks. You become skeptical. You say, wow, it's so volatile, but I just think the opportunities are
huge.
So huge.
They are, and the reality is, I mean, I know people will be quick to jump into the cheaper coins because they believe that they're going to do what Bitcoin did or what Ethereum did. But in reality, you shouldn't look at it like that. You know, if you take an investor's mindset and you look at your portfolio spread, if you're going to invest, let's just take a round figure of £10,000, I wouldn't buy £10,000 of Bitcoin. I might buy £7,000 worth of Bitcoin, £2,000 worth of ETH, £1,000 of 10 other different coins. And I think, you know, if you look at that approach, that is the investor's approach. I'm technical, so I like Bitcoin and Ethereum more than the others because I'm used to what they're doing, and so I have my portfolio leveraged there. But with that £10,000, you could break it down into 100 different coins. It just becomes a case of their management. You know, where do you manage them? Where do you hold them? And I think this is what I was saying about solutions, because if you look at Binance, which is one of the largest markets in the world, their regulation status is very grey. You know, in 5 to 10 to 15 years, that shouldn't be the case. You know, you'll go to these markets where they'll have 100 coins, and it should be quite clear. This is a company in the UK. This is what they are. And I think that's why I say it's in its infancy, because I talk about the onion markets in 2013. Binance is still very grey. Coinbase is doing a fantastic job. I think companies like Kraken, Coinbase are doing a great job. But they're still very young.
Yeah, absolutely. And you mentioned too that you store your coins offline now. This is something that a lot of people are. It can be quite complicated to some people. Like, well, how can I hold my coins on this little USB stick? But I think that's an important thing. It's something I wrote on my article that, even if you don't put everything onto a offline wallet, you should definitely consider at least putting some portion of your cryptocurrency on there just in case the worst were to happen. But I think too, the human psyche wants to look at the value of that portfolio. So by putting it on an offline wallet, they can't do that. Unless you track how many coins you have and then do it on a regular guerrilla calculation.
We are getting smarter. I mean, for instance, Ledger, I have 3 of them. You can use Ledger Live and see the value, but just like traditional stock markets where you might have a portfolio with ADVFN and have all your stocks listed there just as how they're performing, I have one at CoinGecko, which is another website, and I've listed my holdings for crypto there, so I can go on there at any point in time. I can look at my holdings, see how they're performing, and I can also set triggers. So then if I'm purely doing it from an investment point of view and I just want to make a specific gain, then sell, I can do, and that gives you all the information in one space. You're right; it's still clunky.
Now, do you have to manually input all of that information into a website like CoinGecko, or does it actually connect to your account somehow? How does that work?
So some of them can. There are wallet connections. For how I set it up with CoinGecko is they have the assets listed, and if you choose a specific date, it will give you a price, and then you can, if you choose the date that you invested, then the amount that you purchased, it will track it thereon. The negative is if you get into some of these really exotic coins that are sold through places like CoinList, for instance, they won't be on CoinGecko, and there is no way of tracking them. So it's slightly difficult. Plus, the data itself is skewed. I don't know, Lawrence, if you've heard of staking and staking your tokens to make an income, a little bit like peer-to-peer, if you will. CoinGecko doesn't track staking or staking rewards. So, your balance is going up, but that CoinGecko doesn't, and it doesn't know that your balance, if you make a sale, it doesn't know that you've sold. So there is a lot of manual input.
Yeah.
There are solutions coming out that are, improving the way we transact. And I think what exchanges are trying to be, Hotbix, KuCoin, Binance, etc., is trying to be a one-stop shop. So you would buy your Bitcoin on there, you would stake it on there, and you would, manage your portfolio on there. And that's what they're trying to be. But as I said, because compliantly they're a bit of a gray area, I am concerned. I don't hold, a large balance on there. I have it in a hardware wallet just because, there is a famous saying, not your keys, not your crypto. And I really believe, if it's on any exchange, even the best, I still think it's at risk. So I like to have my valuable assets anyway on a hardware wallet.
Yeah, I think that's very, very smart. Couple more minutes and then we're going to let you go because we've been going for way longer than an hour. I wanted to ask you about that FCA letter that was sent out. What were your thoughts on that letter? And I'm going to put it up on the screen here so people that don't know what that is can see it. Have a quick
read. Yes, so actually crowdfunding firms received this in July, a Dear CEO letter that really speaks to us about how we should be treating our companies, our investors, and the checks and balances that we should do. From Crowd for Angels' point of view, I was actually very confident that we've already, done a lot of what they ask. And we've done it for many years. For instance, they talk about high net worth, sophisticated, and retail being a click-through action. That we haven't allowed that to be a click-through action for quite a while. When you come to our platform, high net worth, but the next screen will show you a questionnaire, and it will ask you, have you made an investment before? And it will then ask you questions to determine your experience in the field. And when people pass through that, we can use that data to also provide educational feedback to the investors. One very recent was that most investors felt that bonds, when they reached their term, repaid the capital automatically, which isn't correct. It's only when the company repays can the bond be repaid. So we're able to utilize that data, reach out to those individuals, provide some guidance, and move forwards. But I'm in part support of what the FCA are trying to do here. Things like the due diligence checks, we've always made that freely available. We've always had information on the due diligence we conduct. But I think it also ensures that platforms, not just crowdfunding, peer-to-peer as well, take responsibility for the checks that they do on the companies that are coming to them. We have a quite thorough process. There's an application first, then there's building the pitch, then there's the DD check, then there's a solicitor's check. So there's a number of barriers that companies have to jump through before they can go live. And statistically speaking, we only accept roughly about 8 out of 100 applications or approaches. And I think that's important. One thing, actually, if anybody has some time, there is a UK Crowdfunding Association survey that was recently completed on risk and risk attitudes. And what we actually found was that the majority of investors on crowdfunding platforms understand that these products are high risk. And what was more interesting, which I found the most fascinating, that it was only 30% of those respondents invest for purely financial gains. The majority invested to support the type of company, to support the business. And that's what I really think is interesting. I mentioned earlier I invested in Mondo, which is now Monzo. I did that because I was able to see Tom Blomfield. I know he's now left. But I was able to see him speak on stage in a WeWork years ago, and I was just fascinated by what he said and what he said about the banking system and how they treated users. And it was that story, but also him as a person, that I backed. So yes, it's lovely that I've made a very good gain, but it's just nice to know the person. Actually, I can email Tom, which is even better, because I feel like I've got a special relationship that I have with none of my banks. And yes, I've left HSBC, by the way. I was a HSBC customer for 16 years. I went to Monzo. I was tired.
Happy about that?
Well, it's what happens.
I was thinking, I've been a Barclays customer for longer than probably since I was 16 years old, and it's just such a pain to switch everything. That's the one thing I know some of them will help you do it, but all the stuff I have on my plate, but I really want to get away from these high street banks, maybe to Revolut or Monzo. It's worth it.
They do have the switching service. It only takes 7 days.
Yeah, I know. It's just one of those things you're always procrastinating to do. I think when I get back over there, I'm just going to switch it over. But well, thank you for your insight. For everybody that's been watching, again, this is Andrew. He's from Crowd for Angels. If you want to check out their website, you can do that. It is crowdforangels.com, and there is a nifty little About Us page. Let me show you that right here. You can read about the team. There is Andrew here right in the middle. And then we've got a couple of other people, some LinkedIn profiles.
I hope you can see my email. So if anybody feels free wants to email me a question, I'm welcome to have those conversations.
There's Andrew at crowdforangels.com. It's right there listed on the
Made it nice and simple.
Yeah,
you can pester me and spam me now.
So yeah, if you're interested in the crowdfunding site, I'm not sure, that I'm completely sold on it, but that's more just lack of free capital at the moment and my severe interest in cryptocurrencies. But I think it's a good way to diversify. I mean, I'm all about putting things in different places just for diversification reasons. And I think what you're doing is very interesting. good time. So anything else you want to say to the people out there watching?
Well, thank you for having me. If you do have any questions, obviously feel free to reach out to me at andrew@crowdforangels.com. I have been a fan and follower of the Financial Thing blog for a number of years, so
Thank you.
it's a bit of an honor to be here. You know, it's meeting a hero in some ways. And I was slightly nervous at the start of this, but I feel a bit more comfortable now.
I don't think I'm a hero. I just try to present information for people, try to help them out with their investing decisions, because it is we're in a time now of information age where we can do our own investing now. We don't need to go to financial advisors. That was the whole reason for really creating Financial Thing, and then kind of evolved into the peer-to-peer lending side of things too.
Well, I support that.
Yeah, thank you very much for taking the time. I've enjoyed our chat, and if anybody has any questions, again, go to crowdforangels.com, sign up. You can get a free account there and poke around and see what you think about the platform. So there you
Fabulous.
go. And we'll have you back on in the future, kind of get an update from you, see how things are going over there, see if you're a crypto billionaire yet, which hopefully you bought enough coins back in 2013 where now you're a billionaire, but I don't think many of us have
be a
the
whale.
foresight.
That would be nice, wouldn't it?
Wouldn't it be nice to be a whale? So yes, speak to you soon, Andrew, and thank you again for joining us. Appreciate that.
Thank you.
Okay. So there you have it. Andrew Adcock from Crowd for Angels. Smart guy. Yeah, I'm going to take a look into the platform, do a bit of diving, see what's going on the back end. Because to be honest, I just have never been super big into that type of crowdfunding. So we'll see what happens. I like Andrew. He's always been very kind to me, and that goes a long way in my book. Very polite, very intelligent man. One thing I wanted to do, but I know we've been going for an hour and 20 minutes, but I want to show you what's going on in the trading 212 portfolio. For anybody that's interested in that. Liquidated to quite a bit of cash a few weeks ago, and I think it's been definitely a good move. I haven't looked today, but we have managed to really dodge a couple of bullets here, with the portfolio being down to £12,409. That was up, started at 5,500. You can see here from the amount of cash that has been deployed now in shares. What are we, down 13%? And this is due to the oil has been kind of getting blitzed at the moment, and the energy, you can see to a low right here, down 22%. This Microvision down 40%. Lloyd's is still holding steady, but again, we liquidated a lot of those Lloyd shares. Laredo Petroleum, which was my golden child of what we had in the portfolio, down 6% at the moment. Again, liquidated a lot of those shares in Laredo. What do I think is going on with the markets right now? They are under some severe pressure. I mean, look at the Laredo chart here for the last month. We've gone down from $62 down to 37. We've lost 31, almost 32% on the portfolio, on the Laredo portfolio. I think there's some people out there that's saying the markets are still going to continue upwards. I don't know. I don't have a crystal ball. I do, but it doesn't work very well. But the portfolio is really just in a very defensive spot at the moment. I think I'm just going to sit in cash for the next few weeks, see what happens. This COVID situation is looking pretty bad. A lot of these financial companies in the US are putting out warning signs for a market correction, saying the market is under pressure. I think the governments are continuing to money print to try to put their finger in the proverbial dam of the economy, not only in the US but in the UK, just trying to plug that water leak that is becoming more and more gushing. I will continue to sit in cash until I see a favorable situation to where we can redeploy this money in the portfolio, and it may come soon. Even just returning into some of these oil stocks that are really in a discount now. If you look at Laredo, where it was, I think I was exiting in the $60 range, but this stock was all the way at 95, so we have taken an absolutely massive dump, and this could be a good opportunity for, if you're looking into where's a good buying point when a stock has really gotten beaten up like this, to where it's lost, what are we talking about, a quarter of its value in the last 3 months. Yeah, even just from this high point of $95 down to 37, huge changes. Could be a good opportunity to get back into these energy stocks at a discount. If you look at gold right now, people have been saying, well, gold is going to be the safe haven to an economic downfall, but some of the gold stocks have really taken a beating. Let me see if I can pull one up. This is one of the GLD stock right here. Yeah, I mean, we've seen this, not necessarily, I think I'm putting in the wrong stock. Let me put it GOLD, Barrick Gold, yeah, $19.15, down 1.59% today. But it could represent some good opportunities. I'm not very much big into gold. I think it's an old school method of investing that hasn't really done very well. It was highly dependent on your gains when you went in, when you purchased. Is it going to be any good in the long run? Hard to say. If we look at these 1 year, even Barrick Gold, which is a pretty major gold stock, it's $30.48 at its high point, all the way down to $19 now. So, when there's blood on the streets, this is the time to buy. I don't know if it's this particular time to buy, but we're seeing some pressure on these prices in the stocks. More to be revealed in the future. And I'm going to be releasing this cryptocurrency guide that I've been working on for the last few weeks. I'm hoping it'll go up tomorrow. Just doing a little bit more tweaking on it. And it's a pretty long article. Really describes everything about cryptocurrency, the coins that you might want to pay attention to, why you even want to look at cryptocurrency right now, and then some of the skeptics, points out there that are on the interwebs about cryptocurrency, specifically Bitcoin, about the energy usages, about the scamming, about the hackers, about why it doesn't have any value. And I've addressed all of those things separately in one long guide that you can read about. And personally, it's something that I'm very passionate about. I think it's a great diversification tool and a great inflation hedge, because we've seen what's going on with inflation. The numbers continue to come out economically that are getting worse and worse. We're seeing more unemployment, more people filing for unemployment in the USA. Good barometer of what's going on in the, I think, economy. And a lot of smoke and mirrors about the economy. A lot of false news out there saying the economy is good, it's growing, yet we're seeing a lot of forecast cuts on growth of companies, big companies, and I think it's something to pay very, very close attention to, and this is why I continue to invest in more diversified things such as cryptocurrency, and go from there. Anyway, I know I should have kept Sarah's power. I don't know whether I should have kept Sarah's power. I think the idea was to exit and enter in at a lower point. But yeah, I think what I see, Ceres went up it had a bit of a jump, didn't it, yesterday? I know. This is the problem with trying to time stocks and moving in and out of markets. You can see I exited Ceres and it had a jump. When was it? This week? Yeah, 6.6% in the last week, and I exited out. Whatever. I mean, it is what it is. 28% in the last month. Of course, my missed timing on the market with that one was not great, but it is what it is. That's the problem with buying individual stocks. Sometimes you hits, and sometimes you make misses, so I make misses too, and that's the way that it goes. We are going to wrap this up. We've been going for almost an hour and a half. Ridiculous. Time to get out of here. We're going to have another guest in I forget what the date is. It's going to be Andrew Holgate is our next guest, from one of the founders of Assets Capital. He is no longer with Assets. He's gone on to do other things, but we're going to have an interesting chat with Andrew about the future of peer-to-peer lending and fintech in general, and see what's going on. Oh, by the way, as far as inflation numbers goes, Mike just commented inflation went down in the UK, unemployment went down. I don't necessarily agree with the fact that these numbers that are being reported are always accurate. So I will say that I think sometimes we're fed numbers that may not be exactly what's really going on out there, because for various political reasons. We'll see what happens. But anyway, I'm going to get out of here. Thank you to everybody who joined. And Mark Burnett says, I'll send you a Scotland top. Please do. I threw this one on today. I like this one. I don't know what the star means over here. Where are we? Over here. But thank you for joining. We'll be back next Thursday, 7:30 p.m. UK time. Hit the thumbs up. Hit the subscribe button. And thanks again. Love to everybody. Love you all. Be safe. Have a great week. Speak soon.